This week, Nasdaq was trading at all-time highs. I used the Fibonacci projections for buys and the market structure shift for sells. I'll show you how I almost blew up my FTMO 100K challenge phase 2 on Monday and the exact trading psychology shift that turned the week around. I'll show you how the rejection block built from months of reviewing my own trades helped me bank profits before the market reversed so hard on Thursday afternoon. Welcome to the Displacement Diary, documenting my trading journey one trade at a time. So let's get into it. First things I'll cover today, the Fibonacci projections for buys and how I graded the lower quadrant of the fib extensions for profit targets as the price moved higher. Market structure shift sells and how I logged in profits using the rejection block to avoid ego pips, and how I almost blew phase 2 on Monday, where I placed 8 trades in 11 minutes. That's offer trading. And then the trading psychological shift that saved the account, where I switched from chasing the 5% profit target mountain to protecting the 1.7K buffer I had remaining. And finally, the rejection block examples and why which is a culmination of a long time of journaling my trades. So let's start with the context. On the left here, we've got the US dollar index at the close of day yesterday, Friday. And on the right, it's the Nasdaq. And you see that the US dollar index is going up. Nasdaq is also going up, which is a crack in the correlation. They should be going in opposite direction. So this still calls for caution when trading next week. Let me call out that in my last video on Sunday last week, I called out that this bar on the US dollar index was rejecting the volume imbalance, and therefore we were likely to see price going all the way up and retesting this volume imbalance, and it did that, and then now it's dropping. On the other hand, on the Nasdaq, this is the Monday bar. You can see it was a very small bar, and that's what caused me problems on Monday. And I say that if we didn't revisit this bullish suspension block, we were likely to go further up during the week. And this is exactly what happened. So I'll break it down day by day as I progress. So when the correlation breaks down, bias-based entries without lower time frame confirmation get punished, and that's what happened on Monday. The storm hit on Monday and I lost 4.9K trying to trade the new week opening gap. So on the right here, you've got the daily bars. So Friday close was that, and Sunday open New York Eastern Time was there. So that's the new week opening gap. So coming from Asia into London and going into New York, price moved above the 50% of the new week opening gap, and I saw this BC, and I was aiming for longs to target the regular trading hours close on Friday, which is that line, or the Friday high. Those were my two targets. So I took some longs trying to target those, and the market reversed. And when I saw the market respecting the 50% of the new week opening gap there, I attempted more longs, and still it was failing. When price closed below the 50%, I then attempted shorts. I managed to get one, and unfortunately the other ones didn't pan out, and I was taken out. Then the market respected the low of the new week opening gap as well as the BC, and turned around, and it reached the intended target without me. So Out of that, there are lessons for me. You can have the right bias and still lose money when your timing is wrong. And you can recognize a wrong bias early, switch the direction, and profit. Both of these things happened this week. Wednesday proved it. So, know the driving conditions, adapt your speed, because the size of your success is often determined by the size of the obstacle you are willing to overcome. So I'll move into the trade psychology that changed things. Changing the question. So on Monday evening, one decision that changed the rest of the week is that I stopped asking the wrong question, which is, how do I climb the 5% profit target mountain? That question on its own creates pressure, fear of missing out, and the exact tilt behavior that caused Monday. And I shifted to the right question, which is, I have 1.7K buffer. How do I protect it and grow it slowly? So the buffer is not the obstacle, it is the plan. So three new rules that I adopted. Low risk trades 1 to 2 lots while monitoring correlations, one session only per day, and then 1 hour or higher time frame setups. So I stopped looking at the summit and started watching the next step. So let's get into Tuesday. So Tuesday, New York opened, tested the new week opening gap high, dropped, and then created these relative equal lows. Then we had the Fed chair testimony news, which created a Judas swing, which is the false move going up to trap buyers before coming back on them. So I waited, and then when I saw the market structure shift hit with a fair value gap there, and price closed below the new week opening gap 50% at 11 New York Eastern time, I then engaged a short targeting the new week opening gap low. I suffered hit on that trade, but the new day opening gap held, which is the time between 1614 close and the 1800 open EST. Price came back to my entry and again revisited the new day opening gap. But you'll notice that it wasn't even going to the 50% on both instances. So that told me that I had to hold that trade. My stop loss was above the new day opening gap, and then price then delivered low. However, it didn't reach that. When I saw the lack of displacement towards my target, I realized that there was a reversal that was happening. And if you look on the left of this chart further out there, there will be what's called a rejection block, which told me that I had to get out of the trade before the reversal. So an example of a rejection block, if you see these bodies, the bodies of these bars, they are flat there, and then there's a wick. Look at what price did there. It tagged the bodies, not the low of the week. So that's exactly what happened here as well. So I recognize the rejection block pattern not from a video, from months of reviewing my own trades. So every time price reversed before hitting my target, I wrote it down, studied it, built the pattern, and when I see it, I actually, without hesitation, act on it. So your journal is not a diary, it is a personal trading edge being built one entry at a time. And the result was $81 profit, and my emotional state was 10 out of 10, even when there was that hit that I suffered. That is what process feels like when you follow it. On Wednesday, the right thesis, wrong timing, then profiting. So the market closed below the 112.5 fib extension, and therefore I was looking for shorts to the sell side. So I went into some handsome profits there and didn't reach my target, and price reversed on me. And then I waited. Then price created this BC, and when clearing all these buy side liquidity, and when it traded below the BC, I then attempted shorts again to these vulnerable sell side liquidity areas that were left behind, but that didn't work out. Then I saw price reaching out for the high of that BC, and at that time the penny dropped. I looked at the higher time frame, the 1 hour, and I'll show you something. So look at the bodies of these candles here. None of them were closing above the fib projection line, except for this body, for this hourly candle. As soon as I saw it close above the fib projection, I realized that I had to switch and started taking longs. And I also plotted my fib projection, swing low to swing high, and hours of journaling showed me that if price reaches the 79% or 89% retracement, chances are it will definitely reach the 50% standard deviation and the full standard deviation. So I therefore went in aggressively, knowing that I would get the half standard deviation. I took take profit one there, and then I let the other trade go to the one standard deviation, but I collapsed it earlier when I saw that I didn't have the speed that I needed. And that the shorts cost me $319, the long $636 profit, leaving me with a net of $322. So the takeaway here is that bias is not a signal. The 1 hour close above the level is the trigger. On Thursday, I broke down the Fibonacci projection into further smaller quadrants. So the upper half of the lower quadrant, this is what we are looking at here. So I just want to show you how I broke it down to realize price was dropping and to take my profits. So this is the lower part of the quadrant to that. So I divided that into half first, and that's the price, that price level I was monitoring. And then this lower half, again, divided it into two, similarly there. So just making it fractal. So price respected that half, dropped all the way. So I was looking at targeting these areas for shorts. When that fair value gap was formed and price respected that, when price came here and respected the wicks, there was no body in there. Can you see? I then took a short, but that was stopped out. And then, so this is the 1 hour chart. This is the 1 hour chart, and this is the 4 hour chart. So you can't see really the trades quite clearly. But then I saw price closing back above this mid level, the 50% of this fib projection. And then I took some longs along, targeting the regular trading hours close from the previous day. And that made me $73 profit before price aggressively dropped all the way to the new week opening gap 50%. So I used these gradings, so I've just put them here for you. I'm going to cover them in my video tomorrow when I'm looking at the week ahead, but these are the levels that I'm going to be plotting on my chart. So you can see here, process over outcome helped me bank some profits. On Friday, I'll show you a trade where there was no displacement to my target, which signaled a reversal for me. So I plotted the swing low to the swing high Fibonacci, and then I plotted these relative equal lows as a liquidity rate that was pending. So the market dropped, when displaced high, dropped, created an inversion BC, which was respected there. The halfway line was not even touched. So that showed momentum on the downside. A market structure shift on the 5 minute with a CB again signaling shorts. When price went below the 125% fib, I then took a short targeting these vulnerable sell side liquidity areas, and price went down, but I didn't see it with speed to take out to raid these stops that will be sitting there. Therefore, I realized that it was going to reverse, and I took my profits before uh, they could be eroded. And then the market went up, respected that CB one, two times, but it created relative equal highs. And then I started eyeing to target those. So price went down, then raided, now it raided this sell side liquidity. It also raided the 70.5% of the Fibonacci, and that is a sweet spot to always look out for, and then reversed back up, and this was the trigger. Price closed above the 120.875% fib with an inversion CB. As soon as I saw that price closing above that inversion CB, I took a long targeting these relative equal highs, and you can see to the pip the market hit that and then dropped, and then eventually on Friday, those who looked at it, it eventually rallied up. So that's how it panned out, and out of that I took $76 profit, and my buffer finally closed at 2,294 going into next week. So if there is no displacement to your target, that signals a reversal, and you've got to be cautious. Bank your profits. So now just showing you the unedited evidence. So on the left here, this is the FTMO trading journal, real account. You can't edit it. So you can see when I started the phase 2, and then the 2 days that I had a tilt, and I had 4 clean days this week. What I want to draw your attention to is on the right here. So I want you to look at how slowly I've been growing that buffer that I have since Tuesday. And that is process over outcome that is going to serve this challenge. So at the moment, the weekly profit was $567, and my balance is 92.2K. I've got 12.7K to reach my target to pass phase 2. There are 3 takeaways from this week. So the first one, bias alone is not a signal. So the right bias on Monday lost money. The right confirmation on Wednesday won money. The 1 hour close above the defined level is the trigger, not the analysis. That's the confirmation. So that's the difference. So number 2, the buffer is the plan. Stop measuring against the 5% profit target when you are in drawdown. Measure against what you have left. Protect it, grow it day by day. The mountain gets smaller every time you follow the process. And then finally, your journal is your edge. The rejection block exit on Tuesday and the rejection block reversal entry on Friday came from the same source, which is months of reviewing my own trades, not a course, not a signal service, my own data. So write down every single trade that you make. If this video added value to your journal, please subscribe, like, comment, and I'll see you in the next video, process over outcome.